Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Well, the U.S. and the Houthis have been exchanging attacks. Ed Baxter is all over that story and has more from the 960 newsroom in San Francisco. Ed?
Yeah, that's right, Brian. U.S. Command says it intercepted a surface-to-air missile aimed at U.S. forces, then several hours later intercepted anti-ship missile fire toward the Gulf of Aden, and then shot down 3 drones. Then it says it later struck what it says was a drone control station and 10 one-way drones in Houthi-controlled areas of Yemen. The wait continues for what could be a more involved attack. Defense Secretary Lloyd Austin here.
You know, I don't think the adversaries are of a one-and-done mindset. And so they have a lot of capability. I have a lot more.
Former Deputy to the Secretary of Defense Mick Mulroy on ABC says the attack will have to be at Iran infrastructure and says the delayed response could mean something very significant.
I am, quite frankly, a little confused because I think the Pentagon, and certainly when I was there, and I don't think it's changed much, always has targets ready to go for the President of the United States to retaliate, especially when it's a near constant attack on U.S. forces.
Now, Senator Lindsey Graham is calling for a military strike inside Iran aimed at oil.
The only way they will change their behavior and stop killing Americans and attacking our troops and trying to bomb ships in the Red Sea is for Joe Biden to hit their oil infrastructure and start killing their soldiers inside of Iran.
And Bloomberg U.S. National Security reporter Nick Wadhams on Balance of Power says the strategy shows that there must be back-channel negotiations going on. Otherwise, it's a bit confusing, but the targets are clear.
Iranian-backed proxies in Syria and Iraq. There's a real reluctance to go after Iran, despite pressure from Republicans within Iranian territory for fear that that would essentially ignite a direct conflict with Iran. So this balancing act where the administration wants to signal that the killing of the 3 U.S. soldiers over the weekend will not be allowed to stand, while also trying to avoid the very confrontation and broader regional conflict that President Biden has said for so many weeks he wants to avoid.
And he says it won't be the end, whatever happens now. White House is calling it a new tool. President Biden's new executive order will sanction those committing violence against Palestinians in the West Bank. 4 Israeli settlers are being sanctioned today. NSC officer John Kirby says individuals.
There's no plans to target with sanctions Israeli government officials at this time.
Yeah, sanctions will prohibit them from accessing U.S. financial systems. Senate negotiators closing in on a deal that would address the southern border and send aid to Israel and Ukraine. Senate Majority Leader Chuck Schumer says the package by Sunday with a vote next week. And looky here.
I wanna hold your hand.
Today marks 60 years since this scored their first Billboard Hot 100 #1. The Beatles.
Oh, please say to me.
Everybody sing. In San Francisco, I'm Ed Baxter. This is Bloomberg. Brian?
If we were only old enough to have been there. Wow, what an exciting time. Ed, thank you. We'll get to news again a little bit later in the hour. Now it's time for the top business stories of the hour. Well, as mentioned, Apple reported a deepening slump in China during the holiday quarter. Sales in China dropped 13% to $20.8 billion. And that's even as total iPhone sales were actually stronger than expected. Bloomberg's Emily Chang spoke with Apple's CFO, Luca Maestri, about China shortly after those earnings came out.
He said that they saw a record number, a record install base. They're still seeing strong growth in upgraders. But again, this is a market that folks have been very concerned about based on replacement cycles, based on, bans on foreign technology in the workplace there, reports that Apple is cutting the price of the iPhone in China. So definitely a market to watch, as always.
Bloomberg's Emily Chang. Maestri also warned that Apple's sales growth may not last. It will be hard to compare Apple's current quarter with the period from a year earlier. We mentioned that Apple's stock had traded down in after hours. It's a little more mixed for the suppliers. Had a look at 4 or 5 suppliers, Doug, and many of them are trading higher, but a few, particularly in Taiwan like Honhai, a little bit lower.
So we also heard after the bell from Meta Platforms. Boy, did this company shower the market with some positive news. To begin with, for the fourth quarter, sales were up 25%, profits tripled. Doesn't stop there because Meta announced its first ever quarterly dividend of 50 cents, and the company increased its stock buyback plan by $50 billion. billion. Here's David Kirkpatrick. He's the editor-in-chief at Techonomy Media.
Nothing matters more to Zuckerberg than his image. He was deeply humiliated yesterday in the Senate. I wouldn't be at all surprised if they were not sure whether they were going to announce a dividend and or a big buyback today until they saw how he was treated in the Senate. And he was treated very badly, so they had to put all their wood behind the arrow.
All the wood behind the arrow. 15% higher in late U.S. trading. That's where Meta Platforms traded in the late session. David Kirkpatrick, by the way, is the editor-in-chief at Techonomy Media. Brian?
Well, Amazon reported strong sales and also gave an operating income outlook that surpassed estimates. It's a sign that CEO Andy Jassy's cost-cutting and focus on profitable services is reshaping the company. Operating income for the period ending in March will be $8 billion to $12 billion. Now, that's a very wide range, but the midpoint of that is higher than what analysts had estimated, which is $9.12 billion. And all of that is on the back of sales of as much as $143.5 billion. So these are big numbers. Let's get some context and some understanding here. Reaction from Bloomberg Intelligence's Poonam Goyal.
I do think the real nice numbers here were on the operating income side, right? We saw a big beat there. And that's, I think, thanks to two things. One, the AWS business had better operating margins, and also advertising, which had 27% growth. Keep in mind that that segment has a 50% operating margin. Wow. So really, I think the beat that we're going to see from Amazon on operating margin will come a lot from advertising as that continues to drive superior growth.
Bloomberg Intelligence's Poonam Goyal there. The shares climbed to a high of 174.50 in extended trading. They were up about 7 to 8% for most of that time. The stock has gained 5.1% this year up until this period, after jumping 81% in 2023. But we all remember when it was down so significantly in 2022. Well, let's get to our guest now, Bloomberg technology reporter Jackie Davalos, and she joins us here live on the program. Let's go back to Apple for a moment because China, a big focus, and that's what we're all about, Bloomberg Daybreak Asia. I want to give some context here. Apple's services revenue at $23 billion is higher than the total iPhone sales in China. So I'm curious from your standpoint whether or not that tells us more in terms of the context, tells us more about the China business or the services. One's going up and one's going down.
The China business, we have to understand, is extremely important for Apple. The services segment, remember, that includes the App Store and its streaming platforms. That's really high revenue dollars coming in. And that posted about $23 billion during the holiday period. It was up about 11%. And, it still came in under analysts' expectations. That China business, though, there had been some weakness already baked into the estimates going in. But when we saw the numbers today, they were about $3 billion short. And that's a really big miss when you think about just that scale and the importance for Apple to see that kind of weakness coming from one of its most important markets was a sign for concern for investors for sure.
You're absolutely right. That decline was widely expected, and it's tied to Chinese government agencies and state-backed firms telling employees, hey, don't bring an iPhone to work. I mean, those instructions have been very, very clear. They've been instead encouraged to use the local brand. So let's talk a little bit about competition from a company like Huawei. Is that going to be an increasing factor that Apple is going to have to kind of deal with here as we go forward when Apple considers its business in China?
100%. If we look at some of the high points that the company had when it came to the iPhone, it largely beat on that front, bringing in revenue about 69.7. But it also had the help that it had released a new version of the iPhone. When you think about that increased competition, like you mentioned, from Huawei, it's only going to be able to manage some of these kind of geopolitical tensions that end up showing up through some of these restrictions so much. So at some point, you're going to see perhaps the company make more statements about how it's not just diversifying, but maybe putting more capital and focus on other lines of business to smooth out some of that rockiness coming from China. And on that note, let's take a look at one of the areas that it is investing in quite heavily. This is the eve of the Vision Pro headset release. That is one of the areas that's new to Apple. We think about the company as like this major innovator, and on this front, it's sort of a newbie. We're all really excited about that. But when it comes to your point, competition's going to come from a few angles. It's entering this new market, and we'll see what comes of that. Augmented reality is a really expensive venture, but also one of the most innovative fronts we have right now in tech.
Well, we have to remember that the iPhone actually passed those competitors in China to become the number one smartphone seller in China last year. What's happening in China is a little bit outside of Apple's control in some sense. The economy has stumbled. Policy is very uneven. And again, as Doug mentioned, even government officials are telling people, don't bring your iPhone to work. So that's one that's going to play out. It'll be very interesting. Let's switch to Amazon a little bit and talk about what they achieved. You've got cost cutting at a time when they are jacking up sales. It's good for the stock price, isn't it?
Totally. And it was one of the more bright spots in tech, especially when you had a competitor in the cloud space and in the advertising space. Alphabet earlier this week, kind of disappointing. Amazon really gained on both fronts, and you saw them really talk about that the cost cutting benefits that it's been able to reap over the last couple quarters. It's been a pretty bloody season, really the past year for tech. That operating income came in, or it's expected to come in at about $8 billion to $12 billion for the coming quarter. That was just, right above what analysts are expecting. So that outlook, also contributed to that buoyed sentiment that we saw in shares after earnings.
Yeah, speaking of buoying sentiment, I think we have to talk a little bit about Meta Platforms. And I think David Kirkpatrick, we just played a clip of something that David had to say a moment ago, talking about the reaction yesterday as a result of Mr. Zuckerberg's testimony before the Senate committee. Today we learned that the company has increased its stock buyback plan by $50 billion and at the same time announced its first dividend of 50 cents a share. And what David was saying is, going into maybe the testimony yesterday, you could imagine Meta doing one or the other, but not both. And he asked the question whether or not it was possible to imagine this kind of largesse that Meta bestowed on the market today having to do with the challenges that Mr. Zuckerberg faced in that testimony yesterday. You think that's a fair statement?
You have to wonder if it was a diversion act of some kind, because it was pretty painful to watch that hearing yesterday. And it was a long time coming. You've seen so much great reporting from Bloomberg included about just the negative effects that this social media platform can have on young people. And on the other hand, we're focusing on the revenue that it generates. So you got to wonder, was he taking a victory lap? But just looking at the numbers, he certainly could, if we're just looking at the numbers alone. Not only were profits ahead of estimates, revenue came in ahead of estimates. And it's interesting how this was kind of a different type of China story. CFO Susan Li said that strong increase in revenue in the fourth quarter was largely due by high spending in China from advertisers in that region, as well as AI recommended video content. So you're kind of seeing a different story than we've seen on Apple.
It does highlight an interesting point, though, that the big mega cap tech companies are starting to behave more like the old line companies in terms of dividends and buybacks. Is that a trend that we would expect to continue?
I think so, because these companies are reaching a point of maturity. And when that happens, it has only so many areas where it can spend its money. It starts rewarding investors with these dividends. Apple's an interesting one. They've been doling out dividends for a while. And some of these other tech companies have kind of reached a similar stage as well.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.